Welcome. I'm happy to be in Paris today. It's a hot day, 40 degrees, but it's also a hot day because we have this session, which is a test of Inpho Venture Summit. And for the one who know Inpho, we are here really to speak frankly, to have candid discussion, to have hot discussion, sometimes to disagree, but in a constructive way. And I'm very happy to have with us today 4 leading deep tech investors. I will introduce them very briefly, but they will introduce themselves for sure. First of all, I'm happy to introduce you, Eric Benamou. I'm not even so sure you need an introduction, Eric, because based on your very dense and impressive career, 9 IPO, 40 acquisition, you manage your own fund, and you will share a bit more. So thank you again, Eric, for being here. Again, and my own thank you, because you are supporting Inpho for many years. So thank you again for being here today. Thank you, Eric. And we have also George Grass. Hi, George.
Hello.
George is the president and chairman of Inpho Venture Summit. Also here, very well known. You had also a very impressive career from Apex Venture, IBM Venture, where you were MD, and now your own fund with Aviate for many years. So your feedback is very appreciated as always. And by the way, I had a short call with Thomas Krosel, who was mentioning as important you were again to him and his own company, Hawkins. So just to give to the people joining us the chance to have this discussion with you today. Happy also to introduce you, Jean Schmidt. Hello, Jean.
Hello.
So for the one, I'm sure you all know Jean as well from Jolt Capital, founder of Jolt Capital. Also a very impressive career as an entrepreneur, built very successful company. Part of Sofinova Ventures before launching Jolt about 10 years ago. And the specificity of Jolt is to have starting investing in growth stage in deep tech about 10 years ago. And we see now the big trend in deployment of deep tech. So very happy to have you with us today. And I can add also that you are very active on AI with your own tool, Ninja. So don't hesitate also to share a bit about this today. And Reza Malakzadeh from Partech, and Partech is definitely well-known, global fund, very active in deep tech. You're also very successful as this impressive group joining me today. And so thank you for being there also, Reza. And so we're going to start, and before starting it, just also for I'm sure people we are joining in know about myself. So the CEO of Blumorpho, and we are an intelligence, innovation, and investment company, very active in deep tech. That's why for today, the red line we're following is what makes deep tech an attractive asset class in 2026. So we will try to answer to this question. And what is also very interesting for us is to understand what you're expecting from company to invest in, and what could be your advices. This is a test of Inpho Venture Summit. Inpho will take place on October 21st and 23 of October, as usual in Bordeaux. And as you see, this magnific location we have access to since 2008, actually. So Inpho is recognized as a very strong leading biennial summit in deep tech. It's closed door, meaning that we don't have press, we don't have people coming just to showcase. People are selected to come because they are here to speak frankly about what's next to invest in deep tech, or what are the next frontier in deep tech investment. We are only selecting startup companies that have very promising, which means that since 2018, this early stage company in total have raised more than 1.4 billion euro. Knowing that we're selecting them when they were very early stage, I think it's quite interesting to see the work that has been done. And we are also very pleased to have as chairman George Grass. So I guess that George, you're the best one to explain what Inpho is about and why you accepted to become the chairman of this biennial.
Sure, we'll be happy to. And thanks again, everybody, for making time for our brief webinar today. In terms of Inpho, it's a gathering that we do every other year, and it's a well-curated forum to bring together primarily entrepreneurs, founders, venture capital investors, and limited partners, as well as large corporates, both from Europe and across the world together in a small forum, a few hundred people or so, to talk about deep tech, the trends, where the investments are headed, and very exciting part of the conference is to have founders present their ideas and companies to the panel. And we've had over the years some really amazing companies that had their kind of initial, very early recognition at Inpho, which is really our pride and joy. As far as the panel discussions go, we try to keep them brief and to the point. And this year, what's really exciting is, I think, in terms of the dollars at least, or euros, however you look at it, this is the year where there is probably the most amount of capital flowing into what I would broadly define as deep tech globally. When you look at what's being spent behind AI infrastructure, space, energy, autonomy, and obviously applications in healthcare and biology and other kind of services industries, it's a record time. And I think that's going to make it probably one of the more kind of exciting conferences we've ever had. So I encourage everybody to come. Obviously, the venue is absolutely fantastic. And the corporate presentation, the presentation that also makes it quite interesting for both founders and VCs to interact with potential partners for their companies. And it's a small enough forum where you can have really a one-on-one conversation. So I leave it at that and hope to see you in October in Bordeaux, in cooler weather.
Yeah, cooler weather, definitely. Thank you. What makes also Inpho a bit specific is that it's an event organized by and for investors. So it's not like a big show. It's very dedicated to define what could be the interesting next investment thesis. So all those people are very dedicated and also selecting with me the different companies invited to come. So let's start right away. We have the great pleasure to have you as GP and founder of your own fund, which is quite unusual when you meet with a lot of investors. So very happy to have you with us. But could you explain also a bit more about your investment thesis, what you're looking for, and why, as founder, you have selected Deeptech to invest in? We want to start. Maybe George, you could start, and then
yeah,
follow
sure.
by
I mean, I think I will just tee up the topic, and I'd love to hear from Reza, Jean, and Eric on this. So, in terms of the specifics, I guess, we go through these cycles in venture capital, and we have years when biotech gets hot, and even the cyclicality in semiconductors we're very familiar with. For those of us who've invested in that area in the past, we went through phases in photonics. Similarly, in cycles, it became hot and cold again. And right now, it feels like there's a secular trend for an interest in deep tech by capital providers. And I think that's very astute and expected in a way, because the development of software, which was really the hot topic of interest for many years, things shifted to software. Remember that line from Andreessen Horowitz, where software going to eat the world. I think software did some eating, but software has become almost a commodity because of the development tools that exist out there today. So as a natural byproduct of that, there is a secular shift towards infrastructure now, which fundamentally is really driven by innovations in deep tech. AI infrastructure spending, is going from, just if you look at data centers themselves, from being steady at around $500 billion to $1 billion a year to exceeding 4, 5, 6 billion a year just in the construction side, right? And the overall, infrastructure spend just by the big five, IT companies in the world, Meta, Microsoft, etc., themselves is reaching into trillions of dollars. Anyway, all that money is going after really improving how we process information at the hardware level at the end of the day. So I think the world has realized that you can't live without deep tech. Have it be discovering new drugs, have it be launching into space, have it be building new energy infrastructure. So there's an awakening, I would say, globally. And since capital is fluid, right, it can move very quickly. Right now, in 2026, it's really moving in our direction. So I think that's drives obviously our focus at the fund level, and I'd love to hear what my other colleagues on the panel have seen at the fund level in terms of both LP interest in the deep tech area and as well as the quality of the companies versus prior years.
Jean, would you like to give your point of view?
Yeah, sure. I think I'm like any entrepreneur, I'm trying to sort out issues for some customers and create a good company. So when I started Jolt, and you made me younger than I am. Thank you, Géraldine, because I started Jolt now, unfortunately, 15 years ago. I looked at Jolt as a company that needs to be very focused on something which is very well managed and which being very specialized, being very data driven. So I look at my market, Europe, and what do we have here? We have plenty of startups, too many actually. We have plenty of growth companies which don't grow anymore, but plenty of mid-sized companies which require capital. So here you see a need which is absolutely obvious. Then you look at the numbers and you think like everybody's explaining you software is a panacea, it's fantastic, hardware bad, hardware is really bad, never touch that, and internet is the easy way to go. And you look at the numbers and what are the multiples at IPO on internet? 11x in average. Okay, not bad. What are the average multiples on software? 13x on IPO. Wow, even better. What are the multiples on hardware? 16x. Why do I do otherwise? So we decided to go on deep tech because I'm protected by intellectual property with a strong focus on hardware because that's where the value is. And we created a very differentiated set of products, which are deep tech growth funds with all numbers supporting our products in order to convince our investors that it was a good thing to do. So we scaled the fund. First 5 years, we raised 150. Next 5 years, we raised 450. Next 5 years, we raised $1 billion. And so we keep growing on that because what we do is very basic and works. What I wanted to say, because when I was hearing it, George, the market in Europe, and I'm not talking about the world here, but the market in Europe went through a very painful time where people figured out that doing deep tech at early stage was extremely challenging, especially when you are dealing with 10 years fund. So, there is a big lie in that industry, which is VCs are telling, I'm going to do it in 10 years. And they know it's not going to happen. And LPs are telling, I want you to do that in 10 years. And they know it's never going to happen. So on the LP side, it's like, oh, it's going to take 15 years, but you're going to work for me for free for 5 years. It's okay. And on the VC front, it's like, I'm living in the Hopeland, so I think it's going to happen. And if it doesn't happen, I'm going to raise another fund to pay the bills. So when you are in a market like that, which is not organized as a normal transaction between customers and suppliers, you clearly have unsaid things and you have changes of strategies underlying that. So the deep tech thing was too slow. So people moved to, passmethesalt.com and makemehappy.com, and they funded that. It was not deep tech. It was actually very bad for Europe what we did. We organized a pipelines from Chinese bad product in order to kill our own companies in Europe. That created zero value to Europe, but this created value for VCs a little bit. But it destroyed the entire deep tech knowledge in for VCs. So now we are back on track again with people thinking about real technology. And my way, when we started that 15 years ago, was to not do VC, because I agree with the VCs. It was crazy difficult. We did growth because that's much easier, because companies are already grown up, so the exit is a little bit closer, probably 10 years closer. So, just sharing with you a few numbers, over the last 15 years, we exited 50% of our investments so far, and we had an average 3x on investments, on cash, and we had a holding time in average of 4.5 years. So in a way, we are kind of walking the talk. So the product is fitting the equation. And it's a reason why we scale. I'm talking as product and so on. It's a little bit provocative, but I'm not talking about, I'm the friend of entrepreneurs, I'm blah, 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 blah. I'm just kicking ass to make it happen. And I need to fit that equation, because if I don't really have funds which are reimbursed 3 times in 10 years, the little music is going to stop.
Thank you, Jean. Fair and straightforward point of view as usual. Eric, your point of view. Do you have anything to add also, but also to comment on what has been said?
But what both George and Jean made very cogent points. I agree with this broad analysis. I would say that at the big picture level, there are probably 3 important changes which make deep tech extremely relevant today. The first is that we have entered the era of AI, and AI is a GPT, a general purpose technology, and it pulls with it a whole bunch of other technology domains, including deep tech, particularly when AI has to connect to the real world. This is particularly evident when you think about robotics focused companies. Robotics powered by AI can perform astonishing things. I'm not talking about just a humanoid who can dance. I'm talking about robots who do real work in a very intelligent fashion and can adapt to the physical world. So AI is pulling a whole bunch of other domains which were perhaps harder before AI. For example, materials discovery. I mean, it would take too long to enumerate all of the domains which AI is transforming. If you look at the VC stats today, at least in the US, I think that AI-based companies probably represent 75 to 80% of all investments. So it's sucking all the capital. But if you look at the details of it, it's more and more applied AI. We're transitioning from foundational AI like GPUs, hyperscalers. We're transitioning to application-oriented AI companies, and those applications typically involve some form of deep tech. So that's the first point, which is the beneficial impact of having a very fundamental horizontal technology rolling out across all industries. The second is that we have to admit that the world is more geopolitically unstable today. I don't think anybody will question that. There are multiple wars, and we're spending enormous amounts more on defense everywhere, including in Europe. And this is pulling with it a whole bunch of interesting dual-use technologies. So what's happening in wartime is that innovation has to accelerate and has to be battle-tested very quickly. And oftentimes, the initial investments are made by governments, by the Department of Defense of various governments. It's particularly true in Israel, but it's not just true in Israel. It's also true in Ukraine, and at some point it will be true in most other countries. So this is opening up very interesting new domains of investments for people like us on this panel, because you can leverage government-funded R&D, repurpose technologies which have been tested at scale in harsh environments towards civilian applications. And then the last thing that I find really fundamental is that space has become affordable. We have to thank Elon Musk for that, but the fact that we can carry a kilogram of payload into space for $3,000, $4,000, $5,000 is incredible, because it was 2 orders of magnitude greater a generation ago. So this is opening up a whole bunch of new opportunities of investments for all of us. So the environment has become ripe to focus on deep tech and to achieve acceptable returns. I mean, Jean is completely correct in his analysis that for a long time it was hard to justify why focus capital in deep tech, and now the equation has changed. It's kind of a regression to the mean, so to speak. But and at the same time, you find that SaaS company multiples have compressed from 6x ARR to 3.5x ARR. So in contrast, deep tech investments look pretty good in terms of their multiples. So these are the 3 things in my view that make this space extremely attractive, and the timing perfect.
Thank you, Eric. Reza, do you have something to add to that?
Yeah, look, I'm obviously not going to repeat all that's been said, and especially on the numbers. These guys are far better at numbers than I am. I think that the interesting thing for me is that, as George said, technology goes through cycles, and where, at some point, the advent of Linux and virtualization enabled things that we had not thought of before, and it was basically the building and the growing of the cloud. That actually abstracted the underlying hardware from people who were building software. So all the investment world focused on the software, which was the things that we were seeing, and kind of the deep tech was generally handled by the mega players underneath the covers, and people were not seeing much of it. There were actually still great exits back then, even Amazon buying huge companies and Google the same, but they were not in the face of everyone. And the universe of exits was more limited to these mega players. And we in the venture world focused more on kind of the software layer. I think that the advent of AI today is actually shifting that paradigm again. And now hardware and deep tech becomes exciting again, because it's no longer only the purview of a handful of mega players. And so now it becomes even more important to have newer types of deeper technology, including hardware, beyond just your traditional x86 architecture that the cloud providers were having. So this new change, this new paradigm is putting the focus on a whole lot of new things that need to happen so that we can make the most here of the AI revolution and that technology. So, building chips becomes cool again. Building hardware becomes cool again. We can now actually have true robotics that works, because the AI layer is going to help that to be, a viable business out there. So I think that's the really exciting thing. And so in this new wave, yes, there's going to be more focus on deep tech, and as investors, we don't want to miss the opportunity.
Thank you, Reza. So now we're going to use the info style a bit more, focusing on very short answers, because I have a lot of questions for you. And each of you, I'd love to ask you a tricky questions. If you have one field, one topic to focus on, considering the current situation right now, and for the next 5 years, if you have one topic, what will it be in deep tech?
So I'll just keep on going, and then I'll pass the baton. In my case, it's cybersecurity.
Cybersecurity.
Yeah, I think cybersecurity is huge and continuing to be. Actually, AI enables the bad guys, and it's very, very hard to today leverage the existing tools to resist those attacks or be protected. And I think there's huge opportunity in the cybersecurity world as all these cards are being shuffled.
Thank you. Eric, your side? What would be the one?
I would have given the same answer, but since Reza already stole it, I would say smart robotics.
Smart robotics. Okay, I'm gonna have a question for you then. George, on your side?
Yeah, I mean, I'm not sure if I can afford it, but I'd like it to be something to do with AI infrastructure because I think as humanity, I look at these numbers. I don't think we can spend the capital, nor can we expand the amount of energy infrastructure required to meet the demand of AI. So somewhere something has to be innovated where we break that by a factor of 10. So this AI infrastructure build out, have it be the energy axis or the capital axis, has to change. So there needs to be a new NVIDIA, and there needs to be some kind of new nuclear or some other power source to develop this. If I was starting my career right now, that's probably what I would focus on.
Thank you, George. Your point of view, John?
We are entirely focused on semiconductor. You notice that in AI, the guys who make money are the semiconductor guys with crazy gross margins, and the guy who piece money are the AI guys with crazy bad gross margins. So my choice is very simple here. We do the picks and shovels, and we are happy. And semiconductor across the value chain, what we don't go are the romantic projects, the 40 billion fab. We're too small for that. We don't go to the digital chips where, even if you're not very talented, anybody can design a very big chip. But to the difficult things. So difficult things are all the converters, the power management, the sophisticated sensors, the whatever is complicated, and including capital equipment and so on, which are all super required. We are all in a race on the whatever names they gave it, like Moore's and Moore, but we need to have more science. And what is fantastic about semiconductor, it's guiding around, it's driving 60% of the world GDP. Looks like reasonable business to go.
Thank you, Jean. So you all said that a long time ago, Deeptech was not so sexy. And what has changed then? What makes it investable now? And how do you raise from LPs to invest in Deeptech? Yeah, please.
I can continue since I was holding it. So I can tell you, when you go in a restaurant, if the food is good, you don't go to the kitchen. So that's exactly what we do. Good returns, enjoy. And by the way, if you want to know why, we can explain you why rationally that business makes sense. But I think some LPs are looking for sovereignty, and it's true that Deeptech brings that to the table. Some LPs believe, and rightly so, that supply chains are going to relocate partially, and they are totally right. We need more dual sourcing or triple sourcing than ever because of issues in the world, which Eric was underlying. So those are the rational reasons why Deeptech will take off anywhere in the world. But the other point is that, it gets you richer, so you invest in it. LPs are very sensitive to that those days.
And as investors, what make a difference? Because I will ask a question about risk after that, the real Deeptech risk, but we want to take this question before we go to the Deeptech risks. What has changed in your side? Or maybe, I don't know, because in Europe, we are known to have less capital to invest into our company compared to US, but Reza, on your side, because you are both in US and Europe.
I think from my perspective, it's part of what I mentioned to you, which is the cards have been reshuffled. So it's no longer kind of a monolithic Deeptech stack that is being abstracted by the cloud players. I think, as Eric was saying, AI is a general purpose technology, and it's going to require a variety of things. And so we are now seeing the need for differentiated hardware based on what you want to do. We're seeing the need for differentiated hardware to adapt to the power that might be available. Or we're seeing brand new technologies required around cybersecurity because of all the things that AI enables. So fundamentally, because there's so much new opportunities, it's no longer let me do yet another piece of SaaS software that goes after a particular market. All those things underneath are being rethought. And it was kind of the same where historically you would put one big massive, Cisco firewall in your basement and all your servers were in your basement, and that was good enough. But then the cloud came and reshuffled application architecture and introduced opportunities for a lot of new ways to develop apps and protect apps. And I think the same thing is happening here. So what has really changed is the cards are being reshuffled, and you can now do things in a variety of new ways. And this new super powerful AI technology requires new things that need to be improved and need to be rethought compared to how we were doing them before.
Thank you, Reza. And sorry, we're going to try to fix your very short answers just to cover everything. But now, if I am an entrepreneur, I'm active in Deeptech. You, as investors, where do you see the risks? And what is most misunderstood, as other investors might do? But if I am an entrepreneur and you, as an investor, where do you see the risks and where it is more misunderstood? George, do you have a point of view on this?
Yeah, I mean, I think it goes to what I think Jean mentioned earlier, which is this disconnect between life cycle of a fund and the life cycle of a deep tech company. If you're obviously focusing on later stage companies, you can turn things around and get liquidity within 5-6 years. But my first investment in photonics took 19 years to an IPO. With the same CEO and team and same product, it just took close to 20 years. And it was a very, very successful company, both in terms of DPI and IRR. It turns out, even after all those years for our fund and for our LPs. Now you can't bet on those, but you have to be very cognizant that this could take a while, right? Now, I think founders typically go in assuming things are going to go all up and to the right? But iterations take longer in deep tech. Go-to-market can take longer. Now, there are things that have changed, like Eric mentioned. Launching to space now is cheap, reliable. Developing semiconductors has become much more predictable, I would say, with better verification tools, etc. But having said that, all in, the time axis still needs to be something that you need to be aware of.
Thank you. Another risk might be also the need in capital, because of course, between a software company and a deep tech company, you need more capital to raise a company. So I have this question for you also, Eric, and I know that you're also very active in different financial schemes to support deep tech investment, but how do we finance ever larger rounds? You mentioned about physical AI and robotics. We have seen this fundraising from Neuro Robotics recently, this German company, 1.4 billion in Series C. How do we manage that, and is it feasible, and what would be the advices for entrepreneurs?
Yeah, you raised an important point, because I think that the market is becoming less and less efficient as a capital allocation mechanism. I think we see this in public markets, which are increasingly driven by FOMO, by fear of missing out. And that's because I think they're moving too fast for any kind of discernment or analysis to take place. So I mentioned earlier, for example, the compression of SaaS multiple. I think this is way overdone. A share price supposed to be to represent the cash flows of that company's earnings discounted to the present. And there was the assumption that most of these companies would go away in a short term and be replaced by some tools from Anthropic or OpenAI. And obviously, this is not really happening. But the fact that the markets compress these multiples so quickly, so blindly, suggests to me that investors have no clue. They're just watching what seems to be hot, and they're just climbing on and adding to the trend. So in an environment like this, it's very hard for a discerning entrepreneur to have a voice that stands out. It requires patience and persistence. The other thing that's happening is that in this era of hyper concentration, enormous amount of capital is going to very, very few companies. You even see this in public markets. I think the top 5 or the top 7 companies in the S&P 500 represents close to half of the capitalization of the S&P 500. So that's unprecedented, and I think we see this in private markets as well. So the forces at work are too big for a lonely entrepreneur to stop. You just have to persist and find a match with an investor who will really understand what you do and how unique this is. As an example of persistence, I mentioned smart robotics before. Robotics is a field where you can fairly quickly show a product that works 90% of the time. It may take you a year or 2 years to do something that's interesting. But for this product or this solution to work at 4 nines or 5 nines reliability, will take another 10 years. And this is what all my colleagues on this panel said. It takes a while. It takes a while to mature and to deploy at scale. And the market will have to get used to it. You can get huge rewards from great deep tech solutions, but you cannot just improvise them in 2 years. It will take a decade or more.
So that will have to change. We have this question, what's changed in the past, what will have to change is the timeline to grow company. Where indeed, as you say, Jean, when you are more active in growth stage, that change a bit the equation.
And by the way, Jean made this point before, funds of 10 years is an obsolete concept. Our next fund will not be 10 years. We're changing our docs to reflect reality. And if the LPs don't like it, they have to come back to, they have to get a dose of reality to understand.
You know, it had been to me always shocking that people celebrate the size of the funds raised. So people are all excited about post-money valuation of $1 billion, which means nothing, and excited about the amount of money which is raised, on which, by the way, people lie all the time. And all excited. I raised a lot of money. But for the founders who are connected, I want to pass a clear message. The guys who do that are digging their grave, because clearly you need to generate a multiple on the money. You should never forget that. Guess what's happening in France right now? There is 0 IPO. Why? Because everybody overpriced the paper on private equity round, and now they're stuck. So we need to stop this craziness of pushing large rounds for the sake of it. We need to just right-size the rounds of funding. So I will never participate to a 1 billion round where everybody is pouring money in order to be a part of it and have a nice party where everybody is going to congratulate. How much did you put in it? Oh, I put 100, and you, oh, I put a 50. Welcome to the band. You know, what is that? We need to create sound companies which are orderly organized, and we need to create a lot of discipline to scale worldwide. It is not a game of throwing money at problems. So I think I'm shocked by the ever-larging rounds. I think it's going to be more disasters in the making, and we saw so many, large mega whatever using the verbiage of the Musk verbiage, and the guys are kind of ending up in fireworks mistakes. Just give you a few numbers. 60% of all exits are below 100 million. So it leaves still 40%. Yeah, but 92% of all exits are below 800 million. That's getting annoying already. And if you want to go to 2 billion, you end up in a very, very small number of exits, like 2.1% perhaps. Actually, not perhaps, 2.1%. So think about it, when you are a company which is valued $1 billion and you want to do 3x, you had better put your money on a horse at Sunday, because you have a higher likelihood to win. So again, these ever larger rounds, it's bad news to the market. It's what Eric was telling. It's overheating, and people are playing stupid here. The message to founders is, you don't need 500 million to build a nice company. you can do that with much less, especially in Europe, which is a cheaper place.
That's bringing me to my next question, because we see sometimes that Europe is burned compared to US and China. So I have my point of view on that, but what strategy for investing in Europe in one world? Reza, do you want to start so you can take a bit of the floor here?
Sure. Look, I think I don't think Europe is burnt. I think Europe has amazing talent, and when you look at Deeptech, that talent truly matters. We have great folks coming out of research labs and being able to create great technologies. What we've lacked historically has been go-to-market capabilities and ability to really build something that scales and sells. And I think that is changing, but we still remain a much smaller market than the US for sure, and a market where the large customers are still very reluctant to bet on startups. So I think it's, I continue to invest in Europe in companies that have the potential to go and sell internationally. I would love for that to change a little bit, but I think there needs to be a lot of cultural changes for the larger customers to actually buy from startups, and they're not really good at that. And I'm keeping my answers short, Géraldine.
Thank you so much for that. Any additional comment on that? George, you spent 10 days in France. Do you think, I mean, currently we're a bit burnt with the heat we have, but...
Yes.
Yeah. No, wonderful country. I think, look, these are topics that people have been talking about for a long time. Now with AI, obviously, you also bring in the angle of sovereignty into the equation, which, with all due respect, I think the wrong focus. I think building these walls and depending on Brussels to build protective barriers and trade wars, they never last, right? The focus should be, let's build the best thing everybody wants, the best product. And one advantage that I think it was mentioned that exists, France, EU in general, is the technical depth that Reza mentioned coming out of, obviously, the amazing university systems, places like Grenoble that have always created incredible leading edge technologies, have it be Fraunhofer Institute in Germany, etc. There's all these centers of excellence and amazing things come out of them. And then it's a question of how do you wrap an entrepreneur around that. I think that's where the shortage is. I don't think it's actually capital. I think if there's a good idea and a good founder, capital finds its way there. There are many examples of that in France and elsewhere where it's played out quite well, right? But it cannot be around a protectionist angle. I'll draw a line on that because I think that's just frankly a silly game to play. At the end of the day, everybody uses Google because it's the best search engine, period. Minitel was a great idea, but it just scale wins at the end of the day. So if I was in Europe in charge of innovation at a I don't know, government or something like that, I would just let freedom reign basically, and let entrepreneurs do what they have to do to succeed. And the difficulty, I think it's less about the limited size of the market, frankly, because if you have the best graphics GPU for AI processing, anybody's going to buy it. Nobody's hung up about NVIDIA, right? As a supplier, just go build it. Just go build it. People will buy it. And I think in Europe, these founders exist. But I found always the shortage is really more kind of the driven entrepreneur who's going to go conquer the mountain and go make it happen. And then ecosystem that's flexible enough where they can hire the best, and have the freedom to operate at scale.
Actually, yes, Jean, quickly.
No, just what if AI would fall flat on its face? Because, we are all kind of taking for granted that AI is incredibly successful. Today, it is not. It is very surprising that we can manipulate language so well. It is quite impressive to write code so easily. It's impressive. it's impressive, but it's not productive yet. And let's not forget that AI has no clue about the answer why. And causality had never been modeled by AI. If you ask Claude, are you able to manipulate causality? It's answering in a very elegant way, no, but I can create code which is causal, which is a very funny answer. So it's amazing, but I'm not sure it is up to the task, and very, very far from going to general intelligence and all these bogus you are hearing for people who need to raise billions, so they need to give us the highest grade of dreams. If you go down to Earth now, again, I'm a semiconductor guy mostly, so when I look at where we go there, it's an interesting dynamic in Europe. Over the last 15 years, the IP property in the US went from 75% of all the best IP in the world to now 45%. In Asia, Asia went from close to 5% to now 35%, and Europe remains stable plus. The dynamic of the world completely changed, and it's true in medical device as well. The US is losing its luster, and while they were dominating 15 years ago, the entire IP world, right now they share with Asia and with Europe as well. So before we were a distant number two, now we are within a group of three, which are not that distant one from another. So I think the dynamic of Europe is very different. We are not that far from the leaders anymore.
Thank you, Jean. Strong message indeed for the participant to Inpho as well, because as you said, we have a lot of talent. The goal of Inpho is to bring people together and to have this chance to speak with you guys and to get your advices. And I know that Eric, George, you are used to come to Inpho for several years.
Somehow wine tasting made it to the list, Géraldine.
Yeah, exactly. Wine tasting is always help to speak, you know. So it's a good way to...
Wine tasting is an attraction.
Yeah, and this year we're going to do even better, but I don't say more. But so definitely speaking with you guys, but also looking at the different topics. And this is all you covered today. Deep tech for critical infrastructure, security and defense, and obviously dual use. All anything related to semiconductor and also AI infrastructure, as you mentioned, George. Enabling tech technology, as you mentioned just before, Eric. Physical and bio-inspired systems. So always very interesting to discover what our very interesting entrepreneurs are working on. And just for you to remind you that you're going to have to apply for your presentation of your company. You have a jury assessing you and your company. And more than jury, the goal is to have interactions. So you have, I think we have about 80 investors now joining just to meet with you digitally before Inpho and to give you advices. So for the participant today, we are startups and entrepreneurs. Please send your application before the 1st of July so you can enter into the process and you can take the best of it. I think we have some questions, and I know that you will also receive some information from the team at Blumorpho, but Reza, we have one question from someone who wants to better understand also what you define as deep tech. Because of course we have different profile here in the audience, some LPs who are discovering deep tech, some startups, entrepreneurs, corporates. So if you could just give a very short introduction of how you define deep tech, that would be useful for everybody.
Sure. I define it on my side based on the depth of the intellectual property and the amount of R&D that has gone in it, as opposed to, user-facing applications that can be great in terms of developing a process or a usability function or things like that. And so the more IP there is, the more I tend to define that as deep tech. And it can be, deep research in cybersecurity, deep research in algorithms, deep research in hardware. That's kind of my view of looking at it.
Thank you. We have another question. What about quantum end-to-end network as less than... sorry, I'm trying to understand the question here. So quantum end-to-end network, should it be ready by the D-Day? And because we think that the quantum tech is shrinking a bit in terms of roadmap. So is it a field you will invest in? And by the way, we're going to have a workshop and a webinar of quantum in 2 weeks from now. So we can also address this question, but if someone wants to answer about quantum end-to-end networks, could be interesting.
Quantum is probably the one domain which best illustrates the point that Jean was making before. It's not compatible with 10-year funds. And a technology that will probably not mature in this decade is very hard for any one of us to just find investments. So, I mean, I think it has to just mature a little bit more before it gets many of us excited.
Interesting, thank you. Just one sentence from each of you. So what makes Deeptech an attractive asset class in 2026? In one word or one sentence?
A world of new opportunities.
Thank you, Reza. Jean?
It is a mega trend you cannot ignore.
Eric, for you?
Hard to boil it down to one sentence, but to me, in 26 and 27, we are transitioning from the infrastructure phase of AI to the application of AI across many different domains, many different vertical industries. And this is what is pulling deep tech with it. And in fact, this probably answers some of the questions raised before about where Europe can play. Europe is not present in the infrastructure foundation of AI. There's no European NVIDIA. There are very few hyperscalers in Europe, certainly not the same scale as the hyperscalers in the US. But there should be many more competing companies at the application layer.
So that brings me to another question we have received. What technology verticals do investors consider investable deep tech for infrastructure? What are investors' investment prerequisites on this? What are you expecting for deep tech for infrastructure?
I think it's hard to give a generic, answer, because it really also depends on the adequation between what we're looking for our fund and kind of our model. I mean, at the end of the day, it is also an arbitration between all of that. Considering what we invest in, the size of our fund, and kind of the cycles we do today, again, like I'm primarily going to be focused on cybersecurity. I don't have the ability or the surface to go invest in deep semiconductor at this point. So I think the answer is going to be very variable for each of us.
Understood.
I think that when you talk about infrastructure and deep tech, you need to separate two things. Infrastructure is a specific asset class which is yielding 10% IRR. So it's long, it's stable, it's very predictable, and it's lower IRR. Technology is supposed to yield 20% IRR, and it's very different. So when you talk about deep tech and infra at the same time, I'm confused. It's 10% or 20%? Or are you doing 15 or whatever? Our investors are buying a very precise asset class. You pick your bet and you do that. Right now, I'm slightly worried about people who are confused between a data center, which is a 10% yield thing, and AI, which is supposed to be a 20% thing. And don't get confused. Your LPs are going to remind you what you did with their money a little bit later.
What about new energy storage infrastructure? Is it interesting to you?
No.
Eric, on your side, same? Neither. George?
I mean, I think it depends on definition. If you're building picks and shovels, the hardware piece, that's project finance. But if you have a new memory infrastructure enabling flash design that cuts power consumption by 10x and breaking Moore's law, God bless, that's always investable.
Reza, on your side, is it like closer to what you mentioned about cybersecurity, the capital intensivity of the investment?
No, it still remains software. It is capital intensive in the sense of the R&D and the IP required, but nowhere near what hardware is going to require and robotics are going to require. So it still remains much closer to software capital intensity. And I think it's better suited, by the way, in general for European funds, where we still don't have the wherewithal to deploy massively in fabs and semiconductor.
I still have 3 questions, and we have 3 minutes, so I think we can make it. So the single most important trend LP should understand about deep tech investment. Just one word or one sentence.
It's so big that if you don't do it, your funds are not going to be diversified properly. Don't forget that 50% of the stock market is on deep tech now. If you don't do private equity on deep tech, don't come and tell that your fund is diversified. It's not. You are creating a systemic risk.
Eric, on your side?
Deep tech provides much deeper moats than the software companies of 10 years ago. And LPs should appreciate that.
Great. We'll share it as well for that own panel. Reza, is the one thing entrepreneurs should focus on to become global leaders?
I think for me, it's always been about understanding, how to sell beyond your core market, and being a true storyteller, going after the pain point positioning rather than purely your technology. And Americans do that really well. Europeans are catching up, hopefully.
George, additional point to hide on this?
I think Reza actually captured it very well. It's just, thinking globally on day zero is very important. Just don't just look at what's being done in my geography, but what can I do that's of global relevance?
Thank you, George. And one question for each of you. What kind of company would immediately capture your attention if you met them in Bordeaux this October?
You need a company which is displaying. Oh, sorry, please, Eric, please.
It's not so much what the company does. It's who the founder / CEO is, his personality, her personality, and whether or not he or she understands how to tell stories, to use Reza's phrase, and to sell. I'm not going to be impressed by super smart in the IQ sense founders, unless they can explain this to me in a way that's is compelling, and I could easily project that CEO in a sales situation, convincing a customer. So I prefer sales-oriented CEOs than super smart engineering type CEOs, particularly in this era.
Thank you, Eric.
I'm with Eric, and because I invest in very early stage, resilience and ability to hustle are also critical.
And if you are late stage, because I'm late stage, what I would like is something slightly different. I would like people having a strong discipline and kind of a machine in the making. People who think like, I'm going to build a bigger machine. So that's what I need, discipline and processes in the making.
Thank you, Jean. George, the final point as a chairman.
On this question or in general about philosophy of life?
Good. Yeah, and actually, it's true with you.
Well, yeah, true. I mean, I think I like founders who are not afraid to break something. So if you're that type, please come and meet us in Bordeaux. As far as investors go, I hope this gave a sense to people about the diversity of thoughts. It was very, very nice, actually, today to hear the diversity of topics from cybersecurity to space to energy to, I think we're going to have a very fun conversation about the relevance of AI, what it even means. Again, I think this year, because of the significance of what's happened between launch of LLMs, SpaceX's IPO, which cannot be ignored. Even if you think it's a bubble, it's there, it's real. There's real money being made and lost. NVIDIA's market cap, hardware spending by the big 5 companies. These are giant tsunamis. And 2026 will be a very exciting discussion, I think, in Bordeaux. And for founders, it's frankly a fantastic time to be in deep tech right now, I think.
That's a very good conclusion point. And just for me to add that indeed, Inpho is designed for interactions, for meeting. I don't think you have quite so often the time to meet with this kind of people you had met today, sharing their point of view. And again, I can tell that I've seen Eric speaking with a lot of entrepreneurs, and they come back to me and said, wow. And the same for George, and it will be definitely the same with Jean and Reza. So that's a unique opportunity. To join, you need to be selected. Sorry for that, because we are just limiting the room and the place in the room to make it very efficient. So don't hesitate to apply. You have until the 1st of July to do it. And I think the team had in the chat the link to do it. Thank you so much, everybody, for your time and for this great discussion. Thank you, Jean, George, Eric, Reza.
Thank you, Géraldine. Thank you for keeping us on.
Thank you, everybody.
Guys.
Bye-bye.
Thank you.
Bye.
Speak soon then. Bye.